And now let's move across next is HPCL, the stock that has been buzzing for a few days for a number of reasons, be it the government's decision to sell its stake in the oil marketing company to ONGC or the proposed MRPL merger. And recently, the focus has shifted back on retail fuel prices. Now that they are hovering around lifetime highs, joining us now to talk about all these things and more is the Chairman and Managing Director of HPCL, Mr. MK Surana, and our in-house energy expert, Somit Sarkar. Somit, over to you.
Good evening, sir, and welcome to the show. My first question to you would be: now, government has cut excise duty, and is there a chance that OMCs will be bearing the brunt of the rising crude prices?
No, presently the central government has cut the excise duty on petrol and diesel by 2 rupees, which has got an impact of around 2.5 on petrol and around 2.3 or 2.25 on the diesel. Now, yesterday, Honorable Minister has also requested the state governments to consider slashing of the VAT, because the VAT is also quite high in most of the states, in some states even higher. And if that request is considered, then there may be some softening of the prices on that account also. As far as oil marketing companies are concerned, they operate on a very wafer-thin margins, so we do not have much of a leeway. But as we go forward, we need to see how the prices stacks up, how the product prices moves in the international market, what are the effective rates of taxation at that point of time, and what are the crude prices, what are the product prices, and depending on that, we need to take decisions on the prices which should be. Ultimately, it should be a reasonable balance between the consumer's interest as well as the commercial health of the organization.
So, assuming that the prices would go up, will then the OMCs cut their margins?
No, right now we decide the prices based on the international prices on day-to-day basis. Now, this is basically decided on a 15 days rolling prices on day-to-day basis. Now, what should be the actions required? That will depend on what the prices prevailing at that point of time. So it will be a bit hypothetical and presumptive to speculate that, okay, what need to be done at that point of time. As I mentioned, that it is not like we lower the margin or we higher the margin depending on our own wish, because ultimately we also operate in a space which deals with the products, which has got a reasonable sensitivities, and therefore the oil marketing companies operates in a very thin margins actually. So we need to see that what possibilities are there from time to time, and based on that we need to take actions. But normally we have got little leeways on that.
So ONGC will be acquiring government stake in HPCL at a prevailing market price. Will that value be the right value for this acquisitions, because market was expecting some kind of premium valuations to come in?
I do not think that a decision has been taken that ONGC will be acquiring HPCL at the prevailing market pricing. Government has appointed advisors which are there doing their job to do the valuation of the company. Market pricing is one of the methodology to evaluate a company, but it is not the only method to evaluate the company. And therefore, once the evaluation is done, at that time the buyer and seller has to decide that what is the price at which they wish to strike the deal. And so I do not think that right now there is any decision like that which suggests that the deal has to happen only at the market price.
But sir, ONGC CMD did say that the acquisition will happen at a prevailing market price.
Yeah, he did say that. So that is the buyer's view, but there has to be seller's view also on that, and ultimately it has to be decided between both of them. It's not a question of me agreeing or not agreeing. It is to be decided between the buyer and the seller, basically, that what price they wish to decide. As far as we are concerned, as HPCL, we are neither the buyer nor the seller. But there are certain guidelines which are defined in the SEBI Takeover Act or the Majority Transfer Shares Code, and there are certain provisions in the Companies Act, and HPCL will be guided by that.
So once ONGC acquires HPCL, there will be an integration between MRPL and HPCL. So what would be more apt, an acquisition or a merge, and how will that benefit HPCL?
Actually, it makes sense, and there is a reasonable logic for MRPL to be in HPCL fold, because it gives a synergy. They are the standalone refining company, and we have got a marketing setup, and we sell more than what we produce. Now, the proposal is yet to be taken to both the boards as to whether it should be a merger or it should be acquisition. Acquisition has to be there, and the merger may follow if we think that that's the right way to do it. Either acquisition or merger, MRPL being with HPCL is good for HPCL as well as for MRPL.
So your first quarter results were pulled down due to inventory losses. How has the second quarter fared, and can we expect some inventory gains coming in this quarter?
No, the Q2 is just got over 2-3 days back, and the numbers will be worked out. In the Q1, there was a reasonable inventory losses. We don't expect substantial inventory losses in Q2 as compared to Q1, but the numbers are being worked out, and I expect Q2 to be better than Q1, but to what extent, that as the numbers are out, we'll see.
So what are the sustainable gross refining margins going forward for HPCL?
I think the $6 around will be a sustainable refining margin if the crude prices and the product price sustain and there are no inventory losses.
So what is the kind of petrol and diesel volume growth that you're expecting for the financial year 2018?
Now, if you see the last month data, the September was quite robust, and if you see the first half year in this 17-18, I think the petrol has grown by 7 to 8%, and diesel was around 3 to 4%. But if you see September month, it was a double-digit growth for both diesel and petrol. So going forward for the full year, I do expect that petrol should be a growth rate of 7 to 8 or maybe over 8%. Diesel should be around 4 to 5%. LPG will be double digit, and ATF will definitely be double digit.
How do you see the movement in crude oil prices? Are the current level good for the company?
Yeah, if you see for last few days, the crude has been hovering in a range-bound manner between 55 to 60 range. 60 is a strong resistance point, and 55 does find a support base. So going forward, I do believe that the crude prices will continue to be in a sub-60 range, and it will be between 55 to 60. Of course, in recent time, it did pick up to 59 plus, but it came down, and going forward, it should be slightly softer. That's the way I think, but I don't expect it to be below 55 or above 60.
That will be all, sir. Thank you for joining us on the show.